Good day and welcome to this report commentary. This morning, Media and Games Invest, MGI, published their report for the Q1 2023. And I am happy to welcome CEO Mr. Remco Westermann. How do you do, Remco?
Hi, Matthias. Good morning. I'm doing well. Hope you do as well.
You are in New York right now, right?
Yes, that's correct.
Early bird.
Just getting daylight here.
Okay. This morning you published your report. Can you please give us a short summary?
Yes, I can, of course. We have been growing. We have been continued to grow. Only growth was a bit lower than people are normally used from us. Still, we were able to grow 4%, 1% organic growth if you take it foreign currency adjusted. What's important, our ad software business grew with 8%. So that's our core business. That's really where we are also seeing, let's say, our strongest movements. And what, let's say, brought our growth down a bit was the games that we deprecated last year. So that was a 6% minus on the games. So that's the reason that we come to an average of the 4%. Still very happy with it. The environment is still a bit challenging. So against the, let's say, the overall ad market, really happy with these numbers.
Yeah, and you mentioned the weak advertising market. If you look at the growth of your advertisers, you see the median growth is around 2%. Other market reports also predict a rather low market growth for fiscal year 2023. What is your outlook for the rest of the year, and what is the reason for the current weak market?
Yeah, it's difficult, of course, to make a real prediction. If you would have asked me, or let's say end of last year, somebody asked me, I had something like next year will probably be better. But I have to say that Q1 and also even Q2 are still, let's say, not great. Advertisers still holding back their budgets. And price is still under pressure because of less demand. What we see, however, is that advertisers start to become a bit more positive. So I would expect, and that's also, if you look at analyst reports, that Q3, Q4, probably we will see a bit more growth in the advertising market again. And that's what we know from the past. I mean, it can go very fast. In the end, advertising is needed to promote your products, to gain market share and all these things. And advertising, on the other hand, is the one where you can fastest cut your cost. And I think that happened in times of uncertainty. People try to cut costs and they cut the marketing budget in the beginning or they reduce it. And but that will change again. So hopeful that in Q3, Q4 it will improve. Might be quarter later, but it will go up again. That's what I can say also from the vibes in the market.
Yeah, so but how do you see to the long-term outlook of the market and also for MGI?
Yeah, long-term market is growing. Advertising is growing overall. And especially in advertising, the programmatic part is growing much more. A lot of traditional advertising is moving towards programmatic. It's more efficient. There's too many channels to just do it manually. So in that sense, also here we see on the long term and also looking at analysts, there's a good growth expected. And if you then see with our contextual solutions, because there are changes in the market, identifiers are disappearing. IDFA from Apple has already been deprecated. Google is working on it. So with our status in there, I expect us to further outgrow the market, which we also did now in this quarter, in the Q1 2023. But the market will grow faster, but we are planning to grow even faster than that.
As usual, I mean, it's a pretty attractive growth if you just keep up with the market and you insist that you are going to grow faster than the market. How exactly does MGI plan to continue to grow faster than the market going forward?
Yeah, it's a few elements that are important there. In gaming, just to start with that, is not as important as it used to be for the growth. And we have also seen in the market that games is not so easy. Still, gaming for us is very important because it gives us a lot of first-party data. It allows us to test our our AI, our algorithms, and so that's important. But our main growth will come from advertising, from programmatic advertising. The supply side is our biggest part of the business that's growing, adding new customers, adding new features, expanding that. And the strongest growth, and that was also in Q1, where we grew 35%, is on the demand side. That's agencies and advertisers. And that's where we see that the strong position that we have on the supply side really pays off on the demand side, because advertisers want to have as much direct supply as possible. That's a movement market. They want to see transparency, and those things we can offer to the customers. So that's the reason that we see a lot of onboarding. And that's maybe also important to say, also in this kind of depressed markets, people are rather willing also to change supplier and to work with other parties because they see they need to go more efficient ways. So I think that's where we're gaining at the moment. And in that sense, further growth is what we are aiming for.
Sounds great. However, games revenues have fallen due to the divestment in your portfolio. Can you please give us a brief refreshment of the background to that?
Yeah, we announced it, let's say earlier. So as said, games is not the biggest part of our revenues anymore. It's now 19% of the overall revenue. So it really has come down from, let's say, being 100% 4 years ago when we took the decision to go into EdTech. EdTech has really been growing strongly. And as part of that, we decided end of last year to optimize the games portfolio and to take out smaller and, let's say, non-future focused games, or games that are not really going to be profitable on the mid and long term. And that's the reason that we just shut down certain games to really concentrate on the large games. So we have a small portfolio of really strong MMOs. We have a very good portfolio, large portfolio of casual games. We also still launch a lot of casual games. So in that sense, games is still important, as said, for delivering data and for further bringing us forward. But the decline in games is coming from, the deprecation of those games. And we see also, but I think that's what you see with all the game companies, the advertising revenues for casual games have come down. So that's another point that you see, but it has to do with the market, and it will also rebound again.
Yeah, and against the background of the current development in the games market, especially if you look at some Swedish companies, this was certainly a good decision. How do you see the development?
Yeah, I think in the end, in hindsight, we really had the right decision. It was, let's say, we were seeing as a games company that you have to be strong on the advertising side to be successful as a games company. That the demand for our advertising services or the way we build it would be so big. We also didn't know at that time, but we are much more successful on that side. And we see really that gaming is a difficult business, continues to be a difficult business, especially if you're launching games. But if you run it in combination with an EdTech business, it's really a very interesting part to have on board. And that's also, I think, what will continue in the future. We're not striving to become the biggest games company in the world or so, but games for us are important to test our models, to have first-party data, and also to have unique advertising spots. So in that sense, yes, games important, but the focus is fully on the EdTech company part.
Okay, thank you. And if we take a look on the financial side, you refinanced your 2024 bond in the first quarter. It's a bit earlier than would normally be the case. Why was this?
Yeah, I think as an, entrepreneur or as running a company, it's also our responsibility to look a bit further ahead. And the financial markets have dramatically changed in the last year, interest rates going up, and of course all the kind of supply chains, the war, etc. But the market for bonds has changed extremely, and also the high yield bond market in Sweden has changed a lot. And in that sense, we thought, okay, let's really refinance our 2024 bond, and just did it. I think we had a good window. We pay a bit more for it, but for that we have a much longer stretch in the bond. And I think at the moment, long-term certainty is much more important than paying percent less or more. And on the other hand, we also have an hedge on the interest rates. So 65% of our bonds is hedged. In that sense, also higher interest rates will not harm us that much. So I think it was a good decision to do it, and that's where we see our obligation towards our shareholders and bondholders, of course, to really make sure that this company is financed for the long term, and that is the reason we did.
Okay, how do you see the topic leverage?
Yeah, leverage has become, of course, a much more important topic. Also understandable. Investors look much more at it when money is for free, which is not fully for in the market we are in, but it has become much more expensive. We pay a lot more for interest, even though we have hedged. And as such, leverage is something that investors look at. And we have very clearly made the message. leverage is good for growing the company. It makes also a lot of sense for the investors, for the equity investors, but you have to keep it within certain boundaries. And we have defined for us as a company that we want to stay between 2 and 3. We were a bit over 3, let's say, end last year, or let's say Q3 last year, because of some earnout payments that we have had. We have brought it down again, and we're now also, let's say, again, on the higher side, but within the 2 and 3 boundaries.
Okay, and one last question. What is the key issues that you are addressing for the rest of 2023?
Yeah, for using the current market, so really gaining market share and looking at, what do? We bring new customers in, so customer acquisition is very important. We are in Cannes in 3 weeks' time, which is the Cannes Lions, which is a very important show where almost all big advertisers of the world are there, all big agencies are there. So that's for us a very important event. Then the other thing is improving our products, which we do, bring new food features on the contextual side, on the data side, so that's important, but also platform features, just making the usability better, a lot of things there. And and really building, let's say, more products for the same customer, so extending the portfolio for the customers. We are multi-platform or multi-channel platform, and we can deliver more, and that's what we're also doing more and more for our customers. So a lot of growth opportunities. And on the cost side, also important, we have deprecated some parts of the platforms that we acquired. That saves a lot of cost, and we're further very much also working on further cost optimizations. So a lot of things to do, and looking forward to further growth and also further improving our profitability.
Remco Westermann, thank you so much for your time and your answers to my questions. Good luck going forward.
Thank you, Matthias.